Hey everyone, I'm back to answer some tax questions that you have. The first one is, does it make a difference which type of account receives your return on that investment, just a business bank account or something else? I think what the question is getting at partly is if you have income from something, say a rental property, can you deposit it just in a personal account? My suggestion would be have a separate account if it's business income. So if you have a rental property, have a separate account for that rental property, or if you have multiple rental properties, have a separate account for those rental properties where you deposit all the income and you pay all the expenses out of. If you need more money to fund improvements or something for the rentals, take a lump sum from your personal account or somewhere else, put it into the business account and spend from there. Same thing if you need to take money out, let it build up a balance, take the money out and put it in your personal, but run income and expenses through that separate account. As far as the different type of account, I mean, it really depends. There's a lot of factors there. If it's a smaller amount, probably just a simple checking. Some people might have a savings account that pays a little bit of interest, or if it makes sense, maybe there's a brokerage or another type of investment account if you're holding reserves, and you might have some conservative type investments. Most of the time, if you have a business, I would suggest a business bank account just because you have different benefits that the bank will offer for businesses only. So it makes sense. And then if you have personal income, you can use personal accounts and expenses, obviously. But the important thing is keep it separate. The next question is, are there different types of accounts that offer different tax advantages? I think the question is referring about bank accounts. And just as a general answer, it's more about what the account represents. So for example, a checking account, if there's income or interest earned on it, that's all going to be taxable for the most part. But if it's, say, an individual retirement account, well, that's a retirement account. It's going to have potentially deferred income, and so it's going to have its own set of rules. Same with like a self-directed IRA. If you've got an account for that, that's going to have different types of tax benefits. But generally, if you're an individual and it's, say, checkings versus savings, if it earns interest, it's generally taxable regardless of it being a checking versus a savings. Same thing as a checking account for an individual versus a checking account for a business. Income's generally going to be taxable unless there's some kind of retirement plan attached to that account or something else.